I think at the point that you see the mega banks in the United States start to custody Bitcoin, the third leg of the stool will be put in place. And at that point, the treasurer of Microsoft could wake up in the morning and say, I think we should buy some Bitcoin. The CFO would say, okay, well, I guess the accounting looks fine. The lawyers, the general counsel would say, oh, well, the SEC's endorsed this, and there's 34 companies that have 34 ETFs with $70 billion of Bitcoin, so I guess it's a legitimate asset. And then the treasurer could say, okay, to the person at Citibank or JP Morgan, buy us $1 billion, put down the phone.
Michael Saylor, the biggest Bitcoin maxi and one of the few big tech whales, has yet again come up with new predictions about Bitcoin. As he has always believed that there is no better technology and there will never be another crypto coming close to Bitcoin, this thing is going above millions of dollars, which is why he never stops buying. Now, after ETFs of Bitcoin, most of his predictions feels like coming to a reality. A few months ago, during a panel discussion at the Bitcoin Atlantis conference on March 1st, Saylor argued that after the launch of spot Bitcoin ETFs, they have triggered a decade-long institutional gold rush for Bitcoin, which will be aided by the rise of autonomous artificial intelligence AI. And here are his exact words.
If we're talking about the future of Bitcoin, I think that we're in the Bitcoin gold rush era. And it started in January of 2024, and it will run till about November of 2034. It's a 10-year.
Saylor also said the spot Bitcoin ETFs are currently only serving as a distribution channel to 10 to 20% of those interested at the moment, but he sees this rising upward to 100% once banks and institutional warehouses start facilitating Bitcoin trades. When they can buy via their bank, their institutional wirehouse, their prime broker, they will make a $50 million decision in 1 hour. Saylor believes almost all banks will eventually be pressured into custodying Bitcoin because their largest clients demand it. As he said, you're going to see resistance drop. There will be a day where Bitcoin blasts past gold and trade more than the S&P index ETFs. Furthermore, Saylor also sees Bitcoin as crucial in securing the internet as bad actors swoop in on the AI revolution. Saylor stated that, if you want to actually watermark, timestamp, cryptographically sign messages and documents and content, you're going to need Bitcoin to do that as a system of truth. So I think AI will drive demand for Bitcoin in that way. Michael Saylor also believes that Bitcoin will also benefit from developments in autonomous AI because it will need to be powered with digital energy. As he said, if you want to create an AI version of yourself and have it live on the internet forever, you better give it some Bitcoin. So I think there's going to be an interesting demand function there. In addition to these, Saylor also sees some of the heat coming off of Bitcoin when it comes to environmental concerns in the future, if not already. He argued that as Bitcoin has become increasingly energy efficient, politicians and environmental lobbyists are starting to shift their attention to AI's energy demands. Now let's listen to what more Michael Saylor had to reveal about the Bitcoin moment and adoption.
Are you surprised that it's taken public companies so long to begin to adopt this Bitcoin treasury strategy?
I guess I'm a little bit surprised, but yeah, because once you get Bitcoin and it clicks in your mind, your immediate reaction is, oh, I gotta hurry and buy as much as I can because someone else is gonna go take all my Bitcoin away from me. So like in 2020, when I started buying Bitcoin, I was thinking, oh no, I gotta do this in a hurry because someone's gonna figure it out and the price is gonna 10x. And I better get it before it 10x's. So, I mean, that's a natural reaction when it finally clicks in your head because you're thinking, why wouldn't every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion? Because why wouldn't they just want to make the $1 billion, or $5 billion or $10 billion or any amount of money? I mean, Bitcoin, it feels like in the early days the infinite money glitch, right? But the practical case is the world falls into conventional patterns and conventional behaviors and ceremony and ritual. And there are a lot of forces of conservatism that cause institutions and companies to move slower. So for example, in the last 4 years, one question is, will Bitcoin be embraced by the regulators? And that wasn't really clearly answered until January of 2024. So when the United States SEC approved the Bitcoin spot ETFs, that was a major endorsement that this is not tulip bulbs, this is not a scam, this is a legitimate institutional digital asset and digital commodity. So that was a very important point. Another thing that had to happen for corporate adoption is fair value accounting. If you bought $1 million of Apple stock and it doubled, you would have $1 million investment gain. But if you bought $1 million of Bitcoin under the previous indefinite intangible accounting and it doubled, you would probably be showing a loss. So a CFO that's indifferent, if they said, well, wait, I can buy this, and if it doubles, I'll make money, and if I buy that and it doubles, it'll look like I lost money. That was, I would say, prejudicial, hostile accounting. And that only just changed this year. And then the third thing that is required for institutional adoption in a big way is for the banking system of the world to start custodying Bitcoin, right? If I'm Google and I generate $1 billion a month, or maybe $1 billion a week some weeks, I have no problem wiring that money to JP Morgan or Citigroup and saying buy government T-bills, and a junior employee at Google does that wire transfer, and it's routine like this. But if I wanted to buy $1 billion of Bitcoin, I can't wire the money to JP Morgan or Goldman Sachs or Bank of America or Wells Fargo. I have to go find a new relationship. I have to set up a new vendor, right? And a lot of times these companies had the same bank for 20 years.
And these were pretty clear and confident statements from Michael Saylor. Regarding the green checks he referenced, let us clarify that the FASB released ASU 2023-081 on December 13, 2023, which addresses the accounting and disclosure rules for some crypto assets. The new guidance requires companies to measure some crypto assets at fair value and reflect changes in fair value in net income for each reporting period. In addition, businesses must give further information about their holdings of certain crypto assets. The ASU revisions apply to all entities for fiscal years starting on or after December 15, 2024, including interim periods within those years. Early adoption is permissible. If an entity adopts adjustments during an interim period, they must be effective as of the start of the fiscal year that includes the interim period. And this is why Michael Saylor believes we are going to see a lot more adoption for Bitcoin in the near future. Now let's listen to one more clip from Michael Saylor's interview.
I think at the point that you see the mega banks in the United States start to custody Bitcoin, the third leg of the stool will be put in place. And at that point, the treasurer of Microsoft could wake up in the morning and say, I think we should buy some Bitcoin. The CFO would say, okay, well, I guess the accounting looks fine. The lawyers, the general counsel would say, oh, well, the SEC's endorsed this, and there's 34 companies that have 34 ETFs with $70 billion of Bitcoin, so I guess it's a legitimate asset. And then the treasurer could say, okay, to the person at Citibank or JP Morgan, buy us $1 billion, put down the phone. And it's just very stress-free, you see. And right now, we're not quite there. And that's the negative. It'll probably be another year or 2 years before we work through the banking issue. It's clear that it's going to happen, but it'll take a bit of time. And meanwhile, the opportunity is for these companies you named to get a leg up. And if you're the first mover, you have to do more work. It's just like someone that bought Bitcoin in 2013 had to do a lot of work. Or 2017. So you have to do more work, but you get paid. And what I used to say to people is, look, when it's not controversial and it's easy, right? Everybody will want it, right? Nobody will make fun of you for buying it, but you won't be able to afford it. Right? Like you'll be able to buy 1% of what you could buy now. So when it gets easy, you'll have to pay up for the convenience of it, or you can work a bit harder right now, and the marketplace will give you a discount.
And that's all for today. Hope you have liked the video and the content. If yes, then don't forget to like the video and subscribe to the channel so you won't miss any update. See you in the next video.